Welcome in. Joining me today, Gabe Parham with Air Capital Wealth Management, as we talk about your money and what a day to do it, as we saw a significant recovery in the market. And we talked to you earlier this week, and when we're looking for sound advice during turbulent times, which we sure have seen that over recent days, and that advice remains the same. It's to remain calm and don't do anything drastic like pulling your money out of these markets without sound advice. And I think today is an example of why we wouldn't want to do that, because had you done that, you would have lost that money. But really a good day in the markets and a good rebound.
Absolutely. And I think it's just showing us again that we don't know what the market's going to do or when it's going to do it. And anyone that tells you that they do hasn't been investing long enough, right? So what we know historically is that if you can stay invested in the market and stomach the ups and downs, that there are downs, but there's also big ups. And the one thing that you can't afford to do is sell on the bad days, because then you get a day like today.
It is really hard. Let's go ahead and take a look at today's close as we look at a really almost historic day here, Gabe, when it comes to a one-day gain. Dow Jones up almost 2,300 points. It's like almost 8%. The NASDAQ, a 12% jump in one day. Let's take a look at the S&P now, and you can see it's up 474, which is just shy of a 10% gain. All on the news that the tariffs for now are on pause. So I think that's what investors, I assume, that's what Wall Street was looking for, just gives them a little more certainty.
Yep, and what we talked about earlier in the week is that uncertainty is what the market really doesn't like. It may not like tariffs, long-term tariffs even, but what it really doesn't like is not knowing what the outcome's going to be. And so knowing that we have 90 more days to kind of assess what's going on, I think gave the market a pause to say, okay, let's see what this really means.
So let's talk to maybe some younger investors, some people just entering the workforce, and they see this turbulent market and they may have hesitations of putting money into a 401k or investing because they just see these headlines day after day of turbulence. What would you tell those folks who may be nervous about starting investing?
Sure. Well, it's completely understandable, especially if we don't have a lot of experience in it. But we always say that it's time in the market, not timing the market. And so you get your money in, you let it work for you, and historically it's going to go up. And so you can't try and decide, oh, now's a good time, now's a bad time. If you just periodically put in money systematically over time, it is going to give you the best outcome as a young investor.
Well, and there's a difference between day traders, which we see on Wall Street, and then long-term investors, which most people are. And when we say long-term, we're talking decades before retirement. Long-term, it doesn't matter when you start to stick your money in the market.
Not one bit. And to your point, when you're looking at your money, you should be planning for events like this to where you don't need your money within a day or 3 days or even 3 months. And so if you have a long-term outlook, it's very simple. Put your money in and let it work for you.
So let's talk about, this may be a really good reminder for people approaching retirement. So let's say I'm 5 years out from retirement. Maybe I have a kid about to go to college and I have money in a 529. But I'm coming up on that horizon where, hey, retirement is there or it's coming up. This may have sparked, something for those folks to say, hey, now's the time to take a look at this. If you are approaching retirement, that's when you get with your investment people, your experts, and say, okay, let's start developing a plan to reduce risk.
Absolutely, because if you have a plan in place, then these things don't sneak up on you. We should have been planning for your retirement, to your point, 5 years ago, or if retirement's in 5 years, we should be planning for that now. Same with a 529. We know the age of our kids and when they're going to go to college. So if you have a plan in place, you're able to make sure that the ups and downs aren't detrimental to your overall financial plan.
Okay, final thoughts here. It was an update today. Maybe that continues, maybe it doesn't. But again, as we wrap up here, think long term, because we probably have more turbulence coming. These tariffs were paused, China's tariffs remain. Probably some more turbulence ahead.
Yeah, we really think from here that there's a chance that you're going to, we expected a little bit of a bounce off of as much sell-off as there had been, but we don't necessarily think it's going straight back to the highs. You need to, again, plan long-term, don't try and get everything in right now because you're afraid it's going straight back up. Don't pull everything out because it could go back down. Keep going back to your plan and make sure you stay invested for whatever your goal is and when that goal is going to happen.
All right, Gabe Parham with Air Capital Wealth Management. Thank you for some of your time today.
Thank you, Michael.